Good evening to all. I'm Christos, and today we'll explore together why stock prices continue to fluctuate for several hours, even after the stock market has closed. In the end, shouldn't the stock price remain constant until the next day when the markets reopen after they've closed? How can the price change when nobody can buy or sell? Doesn't that mean the stock markets are closed? Not exactly. You see, there's also pre-market and after-hours trading. And it plays a crucial role in our short-term, somewhat speculative, one might say, investments. Let's dive in and examine this together. Before we move forward, if my videos have helped you to get your finances in order and you want to start investing successfully, you can set up your investing account via the links in the description. This way, you can make sure that you're using a reliable platform and you'll be also supporting this channel directly without any expenses. Plus, don't forget to give this video a like and leave a comment. It really helps out with the YouTube algorithm. Of course, if you haven't done it already, subscribe to the channel and hit the bell icon to be notified when I upload videos. In order to be on the same page, let's get the standard disclaimer out of the way. I am not an investment or legal advisor. All opinions expressed in this video and on this channel in general are solely my own. They are meant to entertain you. Do not take investment or legal advice from a person on the internet. Always do your own research. For quite some time in the Telegram group of Financial Greeks, link in the description, we often see this question pop up. Why do I see the stock price changing when the stock market is closed? And since many of you for some reason haven't joined our free Telegram group yet, link in the description, where we address all your daily queries and I promptly inform about any move in my portfolio. Let's discuss pre-market and after-hours trading. Honestly, it's much simpler than one might think. To begin with, think of the stock market as a marketplace. This marketplace opens every day at 9:30 in the morning US time and closes at 4 in the afternoon, again US time. Now the thing is, after closing, there are some traders who still want to continue their transactions outside of these hours. And that's essentially what pre-market and after-hours trading is all about. Essentially, these are the transactions that take place both before and after the official opening and closing of the stock exchange. How much before or after? Though it varies with each stock exchange, the usual times are from 4 in the morning America time for the pre-market and up to 8 in the evening America time for the after hours. You might ask, why don't we just make it operate 24 hours straight? You'd have a point. Logically, that's the direction we're heading. You see, as we mentioned, pre-market and after hours trading is not the main trading field. This doesn't mean that assets aren't actually exchanged. They just happen outside of the stock exchange environment, kind of like directly between the brokers. Therefore, the more brokers agree to keep their systems open for extended hours, the more this time frame will expand. As for the more practical aspects of pre- and post-hours market trading, let's see who has access to these types of transactions. As you can imagine, up until just a few years ago, only the big players in select stock exchanges had this capability with access to more resources than us. But now, everyone has access to a major stock exchange, which grants access to pre-market and after-hours trading. And I'm sure you all understand where I'm going with this. Of course, to Freedom 24, which allows us to buy and sell during these extended hours. And yes, they are the sponsor of today's video. And yes, we will explore exactly how it works. Before we delve into the practical side, let's briefly look at some downsides of trading outside regular hours in hopes of preventing you from losing your money while trying to beat the market. Low liquidity. Trades before the market opens and during off hours are characterized by a lack of liquidity or insufficient liquidity levels, meaning there's no guarantee that a specific trade will be executed. In other words, we might place an order and never acquire the stock we want. Or conversely, we might never manage to sell it, watching its price plummet. Variability. Transactions before and after regular trading hours have low volume, which can lead to volatility and price fluctuations because there are fewer participants. This implies that we might buy a stock, but in the next time frame, its value might drop significantly. Why does this happen, Christos? I hear you ask. It's simple. When there's low volume, someone with a significantly larger order can easily drive the price up or down. And finally, a wide spread. When looking at a stock's price, we see two numbers, the bid and the ask. Of these two prices, the bid is the last amount offered to buy the stock and the ask is the last amount offered to sell it. Without delving into technical details, the difference between the bid and the ask is called the spread. So for math enthusiasts, spread equals bid minus ask. By the way, if you've switched the menu to Greek, these are referred to as the buying and selling price. Now, regarding the spread during regular hours, this value is relatively small. For instance, here we see that the difference is just a few cents of the dollar. However, in off-hours trading, this difference is much greater, often making the transaction unfavorable. This isn't a platform issue. It's the result of lower trading volume. Let's think about it simply. If hundreds of thousands of investors are trying to buy and sell a specific stock simultaneously, it's more likely that the bid and ask prices will converge. Someone will probably agree on the set price. On the other hand, if the transactions are minimal, well, there will be larger gaps between the two prices. And for those who want to see how we invest in pre-market and after hours, the process is extremely straightforward. We go to the Transactions tab. We start the security session, select the stock we want and set a limit. We enter the price at which we want to buy or sell. Usually it's the selling price, but if we want something different, we set our own custom price and wait. If there's enough supply, it's very likely that our transaction will complete immediately. Otherwise, we might have to wait quite a while for it to complete. But this is exactly what we do during the hours the stock market is open, someone might say. Exactly! There's no need to do anything different. At Freedom 24, we can conduct our transactions from 2:10 in the afternoon, pre-market, until 3 in the morning during after hours without any changes. In closing, I want to stress once more that it's not in the best interest of the average investor to trade during these hours. One cannot outsmart the market by catching it off guard while it sleeps. If anyone is caught sleeping, it's the regular investor. Look at how Intel stock $INTC moved a few days ago during after hours trading. Tell me, who could have predicted that? No one. It's purely gambling, and it's best to steer clear of such matters. So what should we do, Christos? I hear you asking. Nothing. Yes, nothing. We don't concern ourselves with short-term fluctuations. We don't look for the right price to buy. We don't check pre-market or after hours. We simply do nothing. We stick to the strategy you've been following for so long, confident in the knowledge that it yields the market's overall return. It's the most boring investment we can make, and that's the best part. Specifically, we save and invest as much money as we can every month in the ETF VUAA, which also tracks the S&P 500, meaning the 500 largest American companies. And it's UCITS, meaning it has zero taxation both on capital gains and on dividends. And it automatically reinvests dividends, meaning we don't have to do absolutely anything. And it's available on Freedom 24, which happens to be the sponsor of today's video. For those who want a step-by-step guide, the process is simple. Sign up with Freedom 24 through the link in the description for 1 free stock. Go to the web terminal, type in VUAA, click buy, and voila, you have it. As always, if my videos have helped you to get your finances in order and you want to start investing successfully, you can create your investment account through the links you will find in the description. This way you are sure that you are using a reliable platform and actively supporting this channel for free. Thank you so much for watching this video. I hope it helped, and I'll see you in the next one.